everyone. I'm Christiana Figueres. I am the co-host of the podcast Outrage and Optimism, and I am the former head of the Climate Change Convention for the United Nations. And it is my thorough delight to have here two fantastic heroes of mine, I must say, who also have been working with us for many years and who I actually think of as friends in this very difficult challenge that we're all facing. So I have here Bäte, who has been the CEO of Allianz Insurance since 2014. And for purposes of this conversation, it would be helpful to know that Allianz is not only one of the largest asset owners, but was a critical, if not the critical founding member of the Net Zero Asset Owner Alliance and has chaired it for the past 3 years. I also have Emmanuel Faber, who is today the chair of the International Sustainability Standards Board, ISSB, that was established just last year at the last COP with the mandate to build a global baseline set of sustainability standards aimed at dealing with what many call the alphabet soup of ESG standards. So a very topical challenge here for Emmanuel, and one that I think will be very helpful to asset owners and investors. So gentlemen, thank you so much for joining us here today at the UNEP-FI Dialogue.
Pleasure.
My pleasure. Thanks for having us.
Could I start with you, Oliver, because let's just take a seat back and remember, why was it that several years ago, asset owners were the first ones, I would say, to step forward and to say it is necessary to pursue net zero portfolios? It was a conversation where you personally were a major leader of that conversation. And as we know, this has now extended throughout the financial sector, fortunately. But why did asset owners take on that goal of net zero portfolios by 2050? And is it still necessary today?
Yeah, thank you, Christiana. And let me start with the last one. Is it necessary? Absolutely, is more necessary today than it's ever been, because we do have now a war in Europe. And when you have a war, people tend to forget the long term because they trade it for the next day. And you cannot blame humans. When you have a war on your hands, you don't think about what's in 10 years. You're thinking about what is in 10 minutes, 10 days, and 10 months. So people are fearful, and they may forget that we are both here to manage the short term and the long term. So it's more relevant today, in my opinion, than ever. Second, why asset owners? Asset owners we define as those that actually have the ultimate accountability for allocating capital. So when you're an asset manager, which we are also a very large one, we have to execute the mandates of our clients. If they say we would like to invest in fossil fuel, we can drop the client, but we cannot change their decision. If you are an asset owner, however, you have the ultimate responsibility. So whether you're a pension fund, you're an insurer, you're a sovereign wealth fund, I think that's something that we need to pay more attention to, particularly those that actually were created out of fossil fuel wealth. Norway is an example. Then you have those that have the ultimate responsibility to do asset allocation in a way that supports the race towards net zero. So that's why it's really important. It's a very simple answer, but it's one. While others have a more indirect. Now, obviously, the banks with lending are also allocating risk capital towards that, and therefore it's very important to have the banks in the asset managers also as a second step, because they can negate mandates and say, I'm not serving clients that are wanting to do that. Now, the challenge is that we increasingly have polarized political atmospheres that are trying to create legal liabilities for managers of financial institutions if they indeed want to drive net zero. A big debate in the United States at the moment. And we need to watch for that very carefully. But it's also an easy excuse, if I may say, and then I'll leave it for now.
Good. Well, that takes it over very nicely to Emmanuel, because Emmanuel, you've taken up a major challenge with the ISSB, newly founded. How will the work of the ISSB help people like Oliver, like other asset owners, other investors, banks? How will it help the financial sector in general to be able to make the responsible decisions that Oliver has alluded to?
Yeah, thank you, Christiana, for asking. And I would certainly echo what Oliver just said before, and add that one of the difficulties, including with the ESG backlash right now, is that there are net zero commitments. They are mostly around 2050, and 2050 is very long. It's very short for climate, but it's very long in the financial domain in terms of what is short, mid, and long term. This is very long term. And the issue is that we are lacking serious ways to measure the credibility of those commitments along the pathway to this 30-year period. So what our standards will do is, first of all, we are going to embark the TCFD framework, which is about metrics and targets, risk management, strategy, and governance all together. We will ask for climate scenario analysis leading to climate resilience plans and pathways, which through this framework will mean that companies not only will deliver the short-term result of where they are on their carbon reductions, because year after year, you will have to share with your investors and bankers where you are on that pathway, but also the next several years where you need to do investments. You will have physical risks, you will have transition risks. What do you do to face them? What is it that your strategy needs to embark? What is the capex which is needed? What are the new strategies, the acquisition, etc. So you will transform something that is sometimes perceived as a very long-term, very global topic, and maybe sometimes very technical topic, into a real business discussion with indicators, facts, and figures. That is what I think the financial sector needs to reconnect with the agenda for that transition with companies. So I think this creation of a language is absolutely critical. I hope we will be successful, but it is deeply needed in order to make sure that this does not remain as big declarations for, frankly, the fifth generation of CEOs from where we are right now, but really on the agenda of the current board and executive team.
Yeah.
And Emmanuel, sorry, Oliver?
No, I just wanted to support that as we have the dialogue. So the Net Zero Asset Owner Alliance has very, very tough 2025 targets, right? This is one of the reasons why we said we do not want to be the sky in the pie program. And all the 40 members, all the 10 trillion that we have in the Alliance have to have these plans, and they need to back them up with facts, both backward looking, i.e. what progress are you making, but also how the targets are set and how they're incentivized. And then openly, how are we struggling? Because there will be discussions around, what is offset versus really reduction, and what offset is a good offset versus a bad offset. My worry is that, and we really need Emmanuel to be successful, that we have just at the moment a cacophony of, people that measure, of definitions, and it's being politicized and not really science-based. It's ethics or value-based, but we have said, including with the SBTi at the UN, we want to be science-based targets. And that's why we have the sector pathway. So let's focus on that. The key thing is that Emmanuel needs to find a very hard way to work with economics and markets, with short-term things, and then also be transparent and able to say, I cannot please every political agenda. And we have said the same. And by the way, that may mean that occasionally we'll lose members because they say in my home country, I cannot really execute the way we need to be, and that's fine. We really believe in the power of the private sector leading the public sector, and let's make sure we don't sort of get lost in the political debates.
And Oliver, is it not true that some institutions, I'm delighted to hear you say that, stay the course, precisely now stay the course, But is it not true that there is at least a temptation, or at least some announcements, that some players in the financial sector are now beginning to swing the pendulum in the other direction, recoiling from the targets that they had set, basically because, I don't know, you tell me, are they concerned about the criticism? Do they want to please everyone? You tell me, why are they doing this, and how should we all react to that recoiling?
As the first one, I don't want to talk about others. They have to do themselves. I can share only observation, and maybe Emmanuel can do the same. So the first one is, if you are a part, for example, of the Net Zero Asset Owner Alliance, you have to dedicate significant resources to the effort, right? So these statistics, these data that we need for the future, we don't have today. So they need to be created. And we have, for example, a number of US insurers that said, we don't want to really commit the resources. The second thing, again, is regulatory risk, particularly in the United States, but in others. There's a political agenda that says we do not want to curtail funding for even sort of not just brown, but the thing that are obviously not in, and they make it a political agenda. And the big banks, for example, in parts do not want to be caught also with personal or institutional liability into the crossfires of that. So I'm always assuming every morning when I wake up that people trying to do a good job and they're not really weak. So there may be many different arguments. The thing that we have to do is we need to put, and there's also political support required, we put the money where our mouth is. So if governments say, I'm working with those institutions that actually have a clear agenda, that have 2025 targets, that have the data, they should get preference over those that back up and back out. And this is the problem I currently see, and this is not complaining about politicians. We talk about all the technicalities, we talk about what is green and brown and what not, but we should say the institutions that do this properly should get preferences. They should be treated more favorably than those that don't. And then governments have credibility in my eyes, not before.
Emmanuel,
if I could add to this, Christiana, I think part of the answer is that facts are not political. And what is missing today is facts in the conversation. We are going to request, for instance, that companies will look in their entire ecosystem, entire value chain, into the risks and opportunities that are related to climate. And again, there can be physical risks. Your factory is not going to have water anymore. Or it can be transition risk. Your biggest customer is going to move from thermic, engines to electrical engines in 10 years from now. This is business. It's not a question of course, policies can be a transition risk. But the point is that whether CEOs say or don't say, whether they're part of the political debate or not about those, we need, as Oliver said, to come from value-based or principle-based or moral-based to something which is simply fact-based. Those risks will not disappear if there is a political debate or not. They will be there anyway. And what is going to happen is that as soon as you flag those risks, I don't know any audit committee that is not going to very seriously look at them and deal with them. And the result may be further investments, changes in strategy or whatever, that CEOs and CFOs will need a language for discussing with their investors because they want the backup of their investors. And I think that we will be coming to a situation where the cost of capital of companies is going to be affected by how resilient they are and how credible their resilience to climate, water, biodiversity, and other topics, depending on what is material for them, is going to be. And at the end of the day, there is, just remember that the Financial Stability Board has embarked climate as part of the stability mandate that they have. So one day or the other, that will transpire also into the banking supervisions. And when the temperature of the portfolios of banks and investors for collateral, etc., will be too high, there is absolutely no way that there won't be a pricing consequent for that. So the markets will play their role of allocating capital in a manner that is dictated by how prepared companies are to address that. And again, I think I'm too long, I'll stop, but I think this is really a very important moment and step where we will depart from the value or moral aspects of what is good or what is bad.
Well, that departure from morality or politics to facts is absolutely critical. But the other critical factor, Emmanuel, is one of timing. I would argue that climate change is unique in all of the SDGs because of the timing that is embedded in climate that is not necessarily embedded in other SDGs. Because as we know, science has very clearly said we have to reverse the increasing trend of emissions right now, reverse that trend to decreasing emissions by 2025 and be at 50% of our current emissions by 2030. So timing is everything. And timing in emission reductions is to a huge extent dependent on capital allocation. All of which leads me to ask you, yes, the work of the ISSB is going to be critical in whether we're able to reverse the trend and be at 1/2. But how soon, and I'm sorry to put you on the spot of this, but we all wake up with the alarm clock in our stomachs. How soon do you think that you will be able to perhaps not produce your final product, but can you begin to provide instruments that can be helpful for financial investment decisions over the next 2 to 3 years?
Well, thank you, Christina, for asking. And yes, my alarm clock is also the one that ticks with climate every morning now, even more than before in this role. What I can say is that when the at COP26, the creation of ISSB was announced, it was also announced that a readiness working group had prepared 2 prototypes. We exposed on these prototypes of the foundational work and climate work until July. We are redeliberating now as a board. We were in Frankfurt, the whole board last a couple of weeks ago, redeliberating in this month about the substance of our climate proposal, which will, I think, in most of the critical aspects will be stabilized by the end of this year. So next couple of months, everyone in the market will know what in essence is going to be our climate proposal. We will need probably a few more months to finalize it, and then it will be available for companies, investors, and for jurisdictions to adopt it. We're talking about mid-23.
Wow. Okay. Well, I can breathe now again. I had stopped breathing a while ago. Thank you. That's fantastic. So, gentlemen, I have one.
Christiana, can I make an addition before you breathe too
Please.
lightly now? There's 2 caveats I want to put out. The first one, we need to make sure that nothing happens that is now happening with financial risk, that is leaving public markets and going into private capital. So what I'm trying to say is, if we don't get this right, also from a regulatory standpoint, we see what we're doing now. A lot of the really dangerous risk in the financial services world is moving out of banking balance sheets into something that's not regulated. So private capital doesn't have to report today through their holdings the same numbers. So we need to be very clever in making sure our governments do not allow that to happen, like they avoid paying taxes, by the way. The second thing is, which is the model, is more leverage and less tax, and this is how value creation supposedly work. I'm sorry. We should really look at that. And the second one, in terms of speed, we need to make sure that the public domain does also follow through. The problems we now have, for example, with distribution is yes, there is about a sort of energy available to people and the price of energy. But the reality is the problems we have is because our infrastructure is so weak and we still haven't found a way to modernize it. And, you know, I get more and more talk, but we have not enough action. And it only happens when the pressure is really big. A number of years ago, we proposed to build an LNG terminal in Germany, where we're laughed at both by the industry and by our governments, which is even more embarrassing. So the point is, how do we make sure we build the grids now in Europe, for example, in order to be able to actually transport the energy between A and B in order to manage the issue? And again, that cannot be done with data. That cannot be done by the private sector. because the regulation for what we, for example, we can invest in, I'll give you another stupid example of regulation that's still persisting, is you can either invest as us into power generation or distribution. Because of the sort of anti-control and anti-competition mechanisms, we cannot do both. It makes no sense in a world where we're trying to transition fast. So we need more pressure on those that are sitting there and can't even get approvals for the basic things to get done. So we'll do what we can do, but we now need a lot more action in the public sector to fixing the infrastructure that will be able us to put the alternative energy sources into power. Now, practical example, last winter, we had a lot of energy that was stored in Denmark. We couldn't send it to Germany because we didn't build the plugs.
Well, so such an important reminder there, Oliver, that it's not just, the responsibility is not just on one side, it's actually the combination and the complementarity of both sides of sectors and capital. Gentlemen, sadly, we have to come to a close, but I have one more question that I would like to ask each of you to address just very quickly. And that is, I have been in the climate space for over 30 years. And one thing that has been consistent throughout is that the more rigor that is put on one side of the lever, the more rigor, transparency, standardization, et cetera, the more rigor, sometimes that increased rigor, in fact, very often leads to less participation. And so there's always this balance between what do we need more? Do we need more rigor? Or do we need more participation? Because they seem, at least in the past, they have actually been contradictory to each other. That is not something that we can actually afford now because we need both more rigor, more transparency, more standardization, and more participation. So would love to hear from each of you very briefly, how do we do that? How do we get both?
Well, maybe I can start. Thank you, Christiana. And this is such an important topic. Just to illustrate that point, we are absolutely clear that we need to be very demanding because this is not about building norms or standards for 5 years ago. It's really about being, at the edge of where we need to be in 3, 5, 10 years from now. So we will be very demanding. But we want absolutely to support people to enter into this and to support the education, the capacity building, etc. So exactly at the same time that we are right now discussing the final climate standards, and there will be things like climate scenario analysis, and there will be probably things like scope 3 full chain. We know all the challenges that are there. And therefore, at the exact same moment from inception, we are building a strategy about implementation guidance, transition periods, scalability for smaller companies. Even more importantly, some of us were at the International Forum of Cooperation in Egypt earlier this month of September to prepare with all the Ministers of Finance of the African Union, the COP27, and the communiqué supported the ISSB work as a way to bring sustainable capital to grow African economies in a sustainable manner. So we can't succeed on climate without having everyone. It can't be just an elite. And this is where your point is absolutely true. And I personally believe that we need to allow companies to use estimates on, for instance, scope 3, and refining a methodology over time, bringing all the protection that Oliver was mentioning before, the forward-looking statement, the safe harbor, so that, again, we need to all learn together. There's no way that we can't do that without that purpose. So we are really working both on the standard setting side and all the implementation support at the same time.
Oliver, your answer.
Yeah, I love your word rigor because it's better than detail. Yeah, and for my anti-model is the sort of green taxonomy from Europe again, which is like prescribing what ketchup you have on the table in a restaurant. So I'll give you an example. A big company in Germany with 1 million cars has a completely electrified car base, but it was not classified as green because in the winter they wear tires, and they have to wear these tires because it's law in Germany. that forbids certain things that are in the tires that don't make it into the green Brussels taxonomy. That's an example where people get totally lost and say, I don't want to spend even time on this anymore because the rules are wrong. And no rule will be ever great, but we need to also trust people that they want to do the right thing. So be very tough, as Emmanuel said, but let's not get lost. Yeah, and maybe sort of let's have a few rules, but implement them really straightforward and no excuses. But we don't need another green taxonomy exercise, sorry.
That is a great place to bring us to a close. Thank you so much. Oliver Bäte, Emmanuel Faber, thank you so much for being with us, and back over to UNEP FI.